Welcome back to the Startup Showdown podcast, where we discuss pitching, funding, and scaling startups. Join us as we interview winners, mentors, and judges of the monthly $120,000 pitch competition powered by Panoramic Ventures. We also discuss the latest updates in software, Web3, healthcare tech, fintech, and more. Now sit tight as we interview this week's guest and their journey through entrepreneurship.
Lee Cantor here, another episode of Startup Showdown, and this is going to be a good one. But before we get started, it's important to recognize our sponsor, Panoramic Ventures. Without them, we couldn't be sharing these important stories. Today on Startup Showdown, we have Joel Cahill with Calano Venture Capital. Hey, how's it going, Joel?
Hey, Lee. Glad to be here. Going well today. Thank you.
So tell us a little bit about Calano. How are you serving folks?
Yeah. Calano, we are seed stage primarily fund. It was co-founded by myself and a good friend, Aaron Solano. And it's been a great experience. We've been at it for close to 4 years, fully invested out of Fund 1 and investing out of Fund 2 right now.
So what's your backstory? How'd you get into this line of work?
Yeah, well, I appreciate stories that are a little bit circuitous sometimes, or at least not the direct path. I spent 10 years in New York after school as a currency trader, and that has absolutely nothing to do with tech startups. But in that time, I had a lot of opportunities to both make and lose money in trying my hand at some angel investing, and found that I just really enjoyed it. I really love the founder journey. I really love the realization of a dream, whether it's something that I'm putting my hands to and starting, which I've had the opportunity to do, or just being able to come alongside founding teams and seeing their vision and helping them to realize it.
Now, did that kind of epiphany happen by you physically experiencing something, or was this something that you were maybe on the sideline and saw somebody else go through and say, hey, you know what, this sounds fun. I think I'd like to go down that path a little bit.
Gosh, it's a good question. Now, I think part of it was just purely from sitting as an investor, being a Wall Street trader, you kind of look at things in a more passive way. But ultimately what helped me to kind of like look at it more strongly was realizing, like, as an investor, particularly in an early stage, you can help shape things. And not because I think I've always got the best ideas, but sometimes it's just having good questions around the table. And the big difference when I was a trader, which was an awesome job, I really, really enjoyed it. But it was, you're a passive participant in the markets, whether I'm trading Mexican peso, Brazilian real, or the euro. You're not changing monetary policy. You're not changing any kind of fiscal policy. You're not able to actually affect cross-border capital flows that would drive those currencies. But with in the startup scene especially, you get to help shape something. You actually get to be involved in changing what that future of that organization would be, and that's super exciting. So I really enjoy the active nature versus passively sitting back and putting money into something and seeing what happens. And that has shaped a lot of the way that Calano works. We stay quite active with our founding teams. So much of that is based on the relationship that you can build, and if there is good rapport and trust, which has to be built, and then when we're able to be in that position, it's been very fruitful for us.
And because you like that sense of getting involved, does that mean that the founders you're choosing to work with are coachable? That they have to have that quality about themselves, that they want to hear some advice, that they're not the ones that know everything and they don't need help, they just need money?
Yeah, you're hitting at one of the key elements, I think, in all of the venture space. One of our last questions with every founding team is, what do you need from an investor? And unfortunately, when somebody says cash, it just means that it's not going to be a fit if they're saying it's just cash. But somebody needs to be coachable, teachable, workable. Because we want to invest in teams who know an industry, know a space way more deeply than we're ever going to know, but also somebody who is willing to come back to the table and say, hey, I don't know how to solve this problem. I don't know how to prioritize these things. I don't know who I should hire for this role. And again, a lot of what we're then doing is just helping them to create a decision framework. We're not necessarily giving the decision to them. That's a rare outcome, a rare occurrence, but more so, how do we actually frame this decision so that we can come to what we think is the best outcome in each one of those steps? Because ultimately what those founders are doing is they've got tons and tons of decisions to make, and the faster they can make them and the more accurately they can make them, the better chance of success.
Now, any advice for those new founders, especially young folks that are out there listening? On one hand, they feel like they have to have all the answers, because why else would you fund me if I don't have all the answers? But on the other hand, you're saying, but be coachable and listen and have systems that are open to help you make better decisions. And, a lot of young people have this fake it until you make it kind of thinking that goes about. And it sounds like it's opposites in some way.
Absolutely. I think we all live with some form of sort of an imposter syndrome, but the last thing that I want is to be funding a team who is trying to act like they've really got everything together and not being willing to look at where their gaps might be. I have yet to find anybody who has no gaps. I don't think that God has created any humans just like that so far. But if they did, I'm sure they're going to be a pre-money, pre-revenue $1 billion company at that point already, which we wouldn't touch. But ultimately, we like to invest in people who are real, who actually can face flaws, who can recognize the places where they excel, but also the places where they've got those gaps. And to kind of get a little bit further at that question, Lee, is to find teams who have a great vision for what they want and a path that they can to get there. And along that path, acknowledging, hey, we don't know how we're going to get the engineering team that we need in order to solve this problem. We don't know how this product needs to look. We don't know all of the various different steps to get there, but having a vision and something that is very clear on how they want to get there, because at the end of the day, we might all of those steps will be different from what we actually plan, but we need to have some kind of plan in place that is clear, well articulated, and digestible.
It sounds like it's a combination of confidence, competence, and a layer of humbleness.
Yeah, it is a confident humility, I think, which from my trading days was something that I learned is having confidence in the steps that you're making, as a trader, the trades that you're making, but also the humility to know that you're going to be wrong a lot. And that's okay. When I was a trader, I was only right probably 1 out of every 3 trades, but the 2 that didn't work didn't kill us. And it's the same thing with the decisions that every founder is going to make. They cannot make 100% of good decisions, but if they make a handful of really great decisions and their bad decisions really aren't that hurtful, you've got a really powerful potential there.
So now when you're looking at a team, what are some of those kind of let's put aside the red flags for now, but just kind of the signals for moving forward. What are some of the qualities they have that you're like, okay, that's good. Like these are the kind of the must-haves that I got to see in a founding team.
A lot of it at this early stage where we're involved is being able to clearly articulate the problem and the solution. And that I think that in itself oversimplifies the challenge there. And to go a little bit deeper, that means seeing where revenue, identifying where your revenue is coming from, identifying, typically we're investing with somebody who's already got product market fit. And so that there is some revenue, but identifying exactly how and why that's coming to them. It's really remarkable the number of times that somebody's like, great, we're doing 100K, 200K, 300K of revenue, and let's just go hit the gas on all of our marketing. And you just have to stop them and say, hang on, do you know who you're communicating to? Who is that customer that you need to be communicating to? Are you building for a single customer, or are you building for your broader base? And early on, that can be some of the hardest decisions, because some of the early customers sometimes are not the ones that are going to take you all the way through. Those early customers sometimes can take you down rabbit holes, which can be really a problem. So being able to clearly articulate your vision and clearly know your what your go-to-market, what is working in your go-to-market, and which customers you're trying to communicate to. That at this seed stage, lots and lots of things will change in time, but you've got to have you've got to be able to deliver a product that has a broad enough potential, a broad enough audience that's not going to crush your team in trying to serve them.
Now, is there a niche that you specialize in, or you're pretty industry agnostic?
I wouldn't say totally industry agnostic, though we are broad, but some of our focused areas have been in esports and gaming. We've crossed over into some of the Web3 and crypto spaces, and we've done a decent amount in influencer and marketing technology, and then just in broader B2B SaaS, we look at lots in that space.
Is there a story you could share about working with a founder or a team that you helped get their business to a new level that maybe even surpassed your kind of expectations?
The first story that comes to mind is one of our more recent investments. It was a 2021 investment out of Fund One. Just an absolute awesome founder. So appreciate him and his excitement for the business. But it was an odd problem. He could generate lots of sales, lots of interest, had great connections within the industry, and a great product, but really struggled to optimize revenue. So we were able to, he was bringing on customers, but not actually generating the revenue that we needed to out of them, which was a lot of it was just communicating the broader value that hadn't been communicated beforehand. And we've seen month over month revenue increases of 5 and 10x since then. And customers are way happier. And so oftentimes a lot of it is just helping somebody to see that there's way more value than they actually think. And we've got to sell to value and not sell to cost.
And it's one of those things that once you kind of see something, you can't unsee it. It becomes obvious to you probably a lot faster than it was to the team.
I think in this case, it certainly was. I try to not assume that I'm always right. In this case, we fortunately, Aaron, my partner, and I were both saw this early and saw it as a really exciting opportunity. And in reality, other investors have passed because I just don't think they saw it the same way. Fortunately, it appears that we were correct on this. It doesn't always happen that way. And so we're really excited to get to be alongside this team to build.
Now, you recently were a judge on a Startup Showdown event. Can you talk about how you found out about that event and why it's important to get involved in those kind of events?
Yeah, absolutely. I found out about it at Venture Atlanta. I was talking with Barrage, one of the on the team over at Panoramic. Great guy. Really, we were connecting over a lot of things in the Web3 and crypto space and gaming. And he's very accomplished in that space. And he invited me to be on there on the Startup Showdown, and I really enjoyed it. It was I've done several of these, but it was a high quality group and a fun panel to be on, and so we got to see some great founders with very cool visions for where they were headed. It actually was a little bit of a challenging decision for us, or for me it was, ultimately for the winner.
Now, any advice for those startup founders that are going through an event like that? What would you say are kind of the do's and don'ts?
Sure. Clarity above all is the best thing. And identify one revenue stream, identify one client at first. You can acknowledge that there will be plenty down the road, but do not try to boil the ocean. Do not try to create 10, 12 different revenue streams right away. We're going to make money from X, Y, and Z. Suddenly we're going to have $50 million in revenue. It's okay to start more slowly, especially in the market environment that's changing now, where there's an emphasis more on getting to cash flow over just rapid growth and burning through cash. And so I think just absolute clarity. I want to see somebody that has clarity on what they want to do, where they're going to go. And again, like we were saying, Lee, that can all be the wrong direction. It's a matter of starting in a direction with where you can then gather the information necessary to determine which course corrections are necessary.
Right. Take action, go boldly forward, and then adjust.
Absolutely. Well put.
So now, how do your relationships evolve? Once you start with somebody, you get them going. How does it go beyond that first initial investment? Sure.
Yeah. So it all depends on that founder and the team and how they want to communicate. We're not trying to add more work to their plate, but we do a lot of ad hoc catch-ups. Something that we do value is, rather than everything just being purely scheduled, sometimes actually just getting on a call. And there are times where there's just personal stuff that we kind of chat through once we've built some rapport. And it's important because our personal lives are important. They shape the things that we do, the way that we feel, the decisions we make, and all of that. So there's a combination of digging hard into, the monthly metrics, but also just making sure that getting to know each other, helping to just better shape everybody's sort of emotional fortitude as we go through the challenges and rational decision making. So to answer your question, it differs from every company, but we make ourselves available and schedule calls, and even just quick text. Hey, you got a few minutes to chat? And sometimes just to check in, not like, hey, how was revenue last week? Did we hit our targets? But how are you doing? Those I think are actually very important. The soft things, we've been very keen to do that all along.
Yeah, it's funny how when you look at it as a human-to-human relationship, you tend to get better outcomes.
Yeah, I like that. I'm going to steal that one. That's a better way to look at it.
Well, what do you need more of? How can we help?
The thing that we, I think, need the most of is, especially in this environment now with lots of, offers getting rescinded and people, large layoffs at some of the later stage. The biggest thing to us is being able to communicate on talent whereabouts. We've got a lot of portfolio companies who are growing, and the unfortunate reality is that the talent pool, the market for talent is loosening, which is really great for companies who are hiring. It's painful for those who are experiencing it. And so the faster that we can make those matches, the better. Everybody benefits, and that's what we've been pushing more towards is being able to better place talent that is being, who's leaving, being let go, who's, losing offers. One of our portfolio companies just picked up 4 people right away in that kind of scenario. So that's a big focus for us right now.
So if somebody wants to learn more, have a more substantive conversation with you or somebody on the team, what's the website?
We are, I think it's calanofunds.com. I don't go over there very much, so.
And it is that, CALANO funds, FUNDS.com, Joel Cahill. If they want to connect with you on LinkedIn, is that another good place to go?
Yeah, LinkedIn is best. I'm not as active on Twitter, and so I know that doesn't fit for the tech personality, but it's just where I've landed.
Look, time is you got to kind of focus in on what's where you're going to be and what's important to you. And I think LinkedIn and doing the work you're doing, it's important. So we appreciate that.
Mm-hmm. Yeah, thanks, Lee.
Well, Joel, thank you again for sharing your story. Like I said, you're doing important work, and we appreciate you. The website, again, is Calano Funds, CalanoFunds.com, and you can connect with Joel on LinkedIn under Joel Cahill. This is Lee Cantor. We will see you all next time on Startup Showdown.
As always, thanks for joining us, and don't forget to follow and subscribe to the Startup Showdown podcast so you get the latest episode as it drops wherever you listen to podcasts. To learn more and apply to our next Startup Showdown pitch competition, visit showdown.vc. That's showdown.vc. All right, that's all for this week. Goodbye for now.